little bit what is an actual short sale
Sure.
so that the consumer out there can really understand what it is?
Yep.
And why is it that we have, at this time in the real estate market, so many short sales?
Sure. Two questions. What is a short sale? A short sale is when the bank agrees to take less than the value remaining on their loan or the balance. So, for example, if you still owed $100,000 on the loan, but you're not able to make payments, the bank may agree in settlement to take $50,000 on the property, and that's by definition it's short of the full amount. And the reason that we're seeing so many now is due to the mortgage crisis that hit in about 07, 08, where we saw a lot of lax underwriting guidelines and people pushing the limits on values and types of loans and number of loans. And many people today find themselves, due to the economic condition, unable to pay their mortgages, but a substantial number of other people find that they owe maybe $100,000 on a house that's only worth $75,000. So they're what they call upside down.
Very upside down, if you ask me. Yes.
For that reason, things are kind of straightening out now, and appear that they will over the next few years, while a lot of these loans get fixed. And in the meantime, the government has tightened the underwriting procedures and process so that we won't repeat this, but that's why we're here today.
That's right. That's right. Yes, I do understand that, and that is one of the reasons that a lot of people, when they think about a short sale, they're thinking, but then with all of that, a short sale is kind of like a pre-foreclosure, like just like you said, somebody, it's also because they also fall behind on their payments, especially when everybody got these adjustable rate mortgages, and then now the mortgage escalates. They can't make that payment anymore. It's beyond their means. And so they're trying to do the short sale. What are the average days that you are seeing on the market with a short sale?
Days on the market, as far as the real estate end, I am not as familiar with. I can tell you the short sale turnaround time.
Yeah.
Because, and what I mean is from the time a contract is written and it comes into my office, the turnaround. I would say average is 60 to 90 days.
60 to 90 days.
However, unfortunately, that's the average, so there are ones that fall well outside. In a good sense, I've had some from 3 to 4 weeks, amazingly, go from start to finish. But in the bad ones, you're looking at 6 months to 2 years, believe it or not. Sometimes they're just very involved, or the clients are not great about producing documents, or there are sometimes other complicating factors, legal issues with title come up or things like that. But average figure 60 to 90.
Okay. And with so many average short sales that are taking place right now, because that's just hundreds and hundreds of short sales.
Definitely.
All the houses that you're seeing practically on the market right now all say short sale. Could you tell us what is the step-by-step process? I'm a buyer.
Sure.
I see a house. I said, okay, I really like this house. I put my offer in. The seller accepts my offer. But I know as a buyer it's a short sale. What does that mean for me as the buyer with that short sale?
Sure. Just to throw in as well, I'd say I don't think in my case inventory right now I have but maybe 2% of homes that they're quote regular in terms of what you say. I either have it's either buyer or seller, but they're all short sales.
Yes,
so
correct.
With regard to the buying process, it's similar to a normal transaction, but the one thing I think most buyers get confused on is that they feel they're signing a contract with a seller and they're signing for a certain closing date, and those are totally misnomers, because what you're really agreeing to do is to agree to negotiate with the lender. The contract price that's written may have little to do with what the lender actually wants, and they may come back and ask for more. But the basic process, you would draw up what we would think of all as a standard contract, select a price that's going to be your offer or starting point, select a tentative or potential closing date, and then as the buyer, it goes a lot like a normal transaction in terms of you submit that, and you just kind of, on the buyer's end, you have inspections and things like that if you're interested.
Yes.
And on those, there's a special rule with regard to whether you do them up front or whether you do them once you have an approval. We may talk more about that. But But the important thing from a buyer's perspective, if I'm representing a buyer in a short sale, I tell them two, big things we have to work on. Number one, most short sales are as is, totally. So if you have CO or other problems, you need to build in an out so that if you do come back and the town wants like a new roof or a new septic or something, that you've got an out. And the other thing is a timeout so that maybe after 90 days it says that if there's no approval yet, you can walk. And again, basically as the buyer, it's very similar to a normal transaction. The seller's the one doing all the work, but patience. That's the big thing as a buyer.
That's right, buyers. And I always talk to you about patience. Patience, absolutely, because we've had some buyers that they go on the contract. They say, well, the seller accepted this offer. Yeah, the seller accepted the offer because they have nothing better to do but to accept the offer. But technically, that contract still has to go to the bank for an approval. And how long do you see it's taking banks to give an approval for a short sale?
Yeah, again, like 60 to 90 on average. 60 to 90 days. Yep. But be prepared for a long wait because, again, that's just the average. And that's where they most frequently fall apart is the buyer gets frustrated or they can't wait any longer or whatever reason, and they walk away.
Right.
So before you put a lot of months into your life of aggravation, be sure. And the trade-off to that, so is you should be getting such a great deal on the house because it's a short sale. So you don't mind, the waiting. But if you're looking for like a quick move or a traditional deal, a short sale's not for you.
A short work. Short sale's definitely not for you.
Definitely.
So technically a buyer who's buying a short sale, not only do they know that they're not overpaying for that house, like several people did a couple of years ago, fighting against each other on these offers. They know they're buying the house either at the rate value of what the market is, or they might even be buying it less than what the market value is. So they're getting a savings when it comes to that. But also the buyer has to understand that it's going to take a couple of months before they actually receive an approval from the bank, and then they can go forward with the transaction to then eventually get to settlement. Now, my understanding is that sometimes even in a short sale, that bank wants to make sure this buyer is qualified, the whole 9 yards.
Sure.
But most of the time also, the banks could possibly come back and say, okay, for example, you gave me an offer for $200,000. These people might owe $400,000. But you know what? We really want $300,000.
Right.
Why do the banks do that? Why do they do that? And how do they back up what they want?
I think it's generally based on what they call the BPO or broker price opinion.
Okay.
And it's similar to an appraisal, but it's done by a real estate broker, a little less expensive for the bank. And my experience has been that they generally use that number as the benchmark. Some banks will say the BPO came in at blank, you have to pay at least that amount.
Okay.
Some of them will take a loss that they may or may not tell you the value of the BPO, but the BPO guides a lot of what the bank does and drives it. I think also they've got pretty sophisticated software and computers, and they plug in all the parameters with the house and how long it's been on the market and what the value is, and that guides them in their process as well.
Okay, great. And with the buyer waiting so many months, I mean, because I've seen some cases where the bank comes back and says, no, we want $300. Then I see the buyer go back and say, no, I'll give you $250.
Yep.
Then the bank, it's like a back and forth with negotiations until finally the bank either bends and says, okay, let's just go with this buyer, because the bank technically knows that if it loses this buyer, now they have to start all over again with another buyer.
Definitely.
Or it's the house going to go to a foreclosure status.
Right. Definitely.
So do you think banks really want to see these short sales go to a foreclosure status? Or no? Or
I don't, but I think that the downfall of the process is that you have very elementary people handling these.
Okay.
What my sense I get is they plug everything in the computer, and whatever the computer says, that's all their mind is able to do. So, like, when you call and tell them real important stuff, like, look, it's been on the market 3 years, this is a cash buyer. In some instances, if you have, like, a smaller lender and a person that's good, they may get that. But, like, the big lenders, and they're just looking at the computer and they, well, sir, the computer says we need, X amount, and they're very inflexible.
I see. Okay. When we come back from this commercial, Dan is going to continue to tell us now. We've been discussing the buyer's side as far as short sales concerned, and we know that for a buyer, it's a great buy. You're getting not only are you getting the house on the market or possibly at market, but you know what? You just have to have patience, and you're going to get a good buy. When we come back from this commercial, Dan is now going to tell us exactly how it's going to work with sellers on the other end of the short sale. We'll be right back. Dan, and speaking on the other side of the seller now, when it comes to a short sale, the seller knows either they're behind a couple of months on their payment, or they know they're about to, or they just know that the house value is no longer there.
Sure.
You know, they may have paid $400,000 for a house, and now the house is only worth $250,000, $300,000. It's a big drop in value of the home. The seller now decides to do a short sale.
Okay.
What is the process that the seller looks into to do the short sale, and what are some of the repercussions that a seller, I mean, there's good things that come out of doing a short sale,
Sure.
which means they're going to avoid a foreclosure, of course, especially if they can't make the mortgage payments. But there's also another side to that where the seller could face some repercussions. Could you please tell us a little bit about that on
Definitely.
the seller side?
Repercussions for the seller are generally we think of in terms of two things, and that is whether or not the bank will pursue or retain rights for a deficiency judgment, which is the shortfall on what you're paying the bank. So, for example, if your loan value is 100 and you're able to get an offer that nets the bank 50, what happens with that extra 50? Our practice is always to request that the bank give a full release and just let you go for the extra 50. Many banks will, but lately they're more trending to either not answering that question and leaving it open in theory that they could pursue a deficiency judgment at a later date, or some are asking right up front for either a note or a cash contribution from the seller. And the other big implication is tax-wise. If the bank does forgive it, they're going to issue what they call a 1099, and a 1099 shows as income. And traditionally, if you had that kind of income, in other words, let's say we were using the example of $100,000 owed and a $50,000 net, you would pay income tax on that $50,000.
Sure.
But in January of 2009, I believe it was, there was a bill passed called the Homeowners Debt Relief Act of 2009, and it said that if it was your principal residence, that any tax on the forgiven amount would be forgiven. So just people should check with a tax attorney or their CPA to make sure that's still current. But that was a way to take care of that one problem. And those are the two major implications or potential problems for a short sale seller.
When the bank is actually telling a seller, okay, we're going to accept this lower offer even though you owe more money, how do they start that process, letting them know that they're going to do a judgment against them? Is it going to be they're going to have an opportunity to pay it on a monthly basis?
Sure.
How is that going to work?
In general, if the bank's going to ask for like a monthly thing or an extra promissory note, that will be part of the approval, and we'll know right up front, and that will be also relevant to whether or not the seller's interested in accepting. I've had banks come back and say that, and the seller says, look, I'm sorry, but I just don't have $100 a month or whatever to pay, and then the bank may reconsider that request, or sometimes the deal will just die because there's not enough money to satisfy the bank. Did I answer the question?
No, you did. One of the things that, so if there's a seller and they know that the bank is going to place, so let's say there's going to be a $50,000 difference. We'll just give you an example now. There's a $50,000 difference. That seller has to be responsible to pay that back to the bank. Yeah, they'll accept this other buyer's offer, so he could just, be free and clear of this house, but he's not free and clear of the remaining debt.
Right.
And he wants to make an agreement. The bank says, give us 100. He says, well, I can't pay 100.
Right.
The bank could possibly say, okay, now pay us 50 then.
Yeah.
He could probably say, he or she could say, yeah, I can afford 50 now per month to a certain amount of years to pay off that debt. Now, is there interest on that? How does that work? Is it just $50 flat fee?
No, it's up to each bank.
Each bank is different.
And every policy is different. And I think the way to answer it is, again, some banks will ask up front for that, and that would be part of the approval. other than that, there's no way to address it up front. It's kind of a waiting game to see if the bank does, eventually pursue that.